Hello, everyone. Today, my guest is Bruce Buchanan. He is the creator of a company called Rokt. We'll jump into in a second. But as an early entrepreneur, he founded his first business at the ripe age of 16. He was a leader in the consumer practice at Boston Consulting Group and then built Jetstar into the largest low-cost airline in Asia with 7,000 plus employees. After Jetstar, he revisited his roots and created another world-class company in Rokt. He expanded the company from a handful of employees working in Sydney in 2012 to a global team of more than 100 across 4 continents. Bruce, are you ready to take us to the top?
Ready.
All right. Look, Jets is way sexier, I think, than most spaces. Why leave Jetstar?
Well, Jetstar was a business that I didn't own. I was a hired gun at the time, working for effectively the board and the shareholders, which were primarily the main business owned by Qantas. And I had a lovely time. But, when I got this sort of philosophy, when you wake up every morning and you're not energized and excited to go and do that thing that you're doing, it's time to do the next thing. And that's what I got to with Jetstar. I'd spent 10 years building a fantastic world-class airline and decided it was time to step out and follow my dreams and do the next thing.
All right. What is the next thing? Tell us about Rokt. What's the business do and how do you make money?
So Rokt is a marketing platform for e-commerce companies. It basically helps them manage all the marketing messages in and around a transaction. So they can be upsell messages, they can be opt-in and marketing messages, they can be charity, they can be market research, they can be a whole raft of things. But we give them a tool set that allows them to campaign, make all of those things campaigns, and be able to manage each individual consumer with the right messaging so that you're not sort of wedded to this old legacy e-commerce platform. You've got a modern cloud-based marketing platform that you can actually inject into your e-commerce flow.
Okay.
And it's designed purely for e-commerce. It's designed really to solve a whole raft of challenges that primarily e-commerce companies have.
And revenue model, is it a SaaS model or transaction model? What's the model?
So there's 4 different products, and each of the 4 products have different revenue models, 3 revenue models.
Jesus, Bruce, how do you stay focused?
Well, they're all linked to the same platform, but it depends on who's using it. And what the use case is. So they've got 2 of our products that are SaaS-based. So our optimized product and our CalReply, which is a calendaring SaaS product we bought last year, they're SaaS products. We've got our monetized products, effectively a JV product where we share revenue with them, sort of like an AdSense model. And our acquire product, which is an acquisition product for new customers, is a CPC type model like AdWords.
Okay. So, and is revenue generally distributed 25, 25, 25 across these, or is there 1 or 2 that make up their majority?
So 2 of the products are directly linked, so the same revenue flows through both of them. If you imagine AdSense and AdWords in the Google model, every dollar that comes through AdSense comes from AdWords. And so we're the same. Every dollar that goes through Acquire finds its way back to monetize. So those 2 products are the dominant revenue streams at the moment. Probably about 90% of our revenue flows through those 2 products.
There are so many companies. I talked to Bill Wise recently with MediaOcean. There are so many companies kind of in this space, ad management, whether it's e-commerce, offline, et cetera, that are trying to figure out how to go from this transaction kind of ad tech fee model to a SaaS play. Is that what drove your acquisition last year? And if so, how did you find the target?
Look, it wasn't so much that. What we've been looking for, our primary focus is how to make e-commerce smarter and faster and better. That's really what we're in business for. And the CalReply acquisition
what's the URL for that? Or what was it?
It's CalReply. You can still find it at calreply.com. So it's CalReply.com. And it's a calendar management company. It's used by a whole bunch of businesses like ESPN. So if you want to find out the latest sporting events, you go to CalReply, sign up to a particular calendar that interests you, and all those major world sporting events that are fed into your calendar, and you can click on them and tune in whenever you want. So it's effectively like ExactTarget or like the email platforms, but it does that for calendars. So if you imagine that as another communication channel and things that are more time sensitive, like sporting events, ticketing, travel, TV networks, they tend to use it as a communication channel for those time-sensitive things.
And you said that was a pure SaaS play, right?
It's pure SaaS play. And we bought it because a lot of our companies in the ticketing and travel space are looking to diversify their own media communication channels. And so rather than just relying on email, which is fantastic, or email and push notification, they're looking for new ways to get to people that are more relevant for that particular message. And calendaring is a great one for time-sensitive messaging.
And had they stagnated and you were able to get a great deal, or did you pay a premium to get it?
Look, we paid. It wasn't a massive deal because the revenue numbers for them weren't massive. So
Like
you're in
sub
the
1 million, would you say?
no, we paid 15 million for it. So it
On
wasn't
revenues of what though?
a
About
revenues of 1.5 to 2 million sort of range on a SaaS basis. And the primary reason we bought it is we saw real synergies with our existing clients. There's a lot of businesses like airlines, like Ticketmaster, Live Nation that we work with that are looking for these types of solutions. And the point that the primary point of getting consent typically is around the transaction. So if someone's just bought concert ticket, that's a great time to say, look, can we put them in your calendar and can we feed, reminders to you and print out whatever the particular messages are you want to do. That's a great time to actually have that communication with the customer.
And you made that acquisition, I believe you said a year ago, correct?
Last February, we finalized that, yeah. So not quite a year ago, but almost.
Okay. What has panned out exactly as your pro forma said they would, and what surprises popped up once you started digging through the code?
That's a great question. Look, the product integration has taken longer, primarily because of focus issues on our side or reprioritization issues. We've got big clients. We drove last 3 years, we've driven 100% revenue growth pretty much year on year. And last year, we did the same thing. And it was just prioritizing what was going to drive revenue last year for major clients versus what was going to be next year, the year after. So that's probably the longest thing. One of the big surprises is the talent we acquired and the impact that has on the broader business. The owner and founder of that business, Brad, joined the board and has become a senior member of our team and has added a huge amount of value to the business, way and above beyond what the CalReply business. When we looked at it, we were looking at it purely for the CalReply business, but we weren't looking at the impact that would have on Rokt.
Was there an earn-out structure that made him stick around, or was it all cash up front?
There was an earn-out structure. And they were very keen for that because Rokt was growing so fast that they got 2/3 of their deal in Rokt stock. So that sort of created a high degree of alignment in making, the success of the transaction and also driving longer-term success in Rokt.
I think there's such a huge opportunity for smart entrepreneurs like you to go make acquisitions like this. I mean, you just saw this actually. Brad Feld did this where he sold Mattermark, where he was on the board, to Full Contact, which is he's also on the board. Full Contact is bigger. And in order to make sure the LPs didn't have to take a write down on in your case, I think they raised about $6 million to avoid a write down. They just say, hey, we got Rokt stock now and we're really bullish on it. So maybe it'll turn into something big one day, right?
Yeah, look, I think they did well anyway because the funding on the business was relatively small. It was largely bootstrapped. And so I think the investors were also pretty happy. We had some common investors as well that were very happy to get more Rokt stock.
Yeah. They raised, I think they raised about $6 million, didn't they? I mean, that was pretty significant for their size in terms of ARR.
Yeah, I don't know if it was probably, there was some currency impacts and a few other things there. I think, they would have raised all that money in Australia and Australian dollars, but, in the $15 million deal, we paid them $5 million in cash. And I'm sure that they would have, the net of that probably would have been a nice return for the investors in terms of what they put in cash.
Got it. Okay. That company, you said you acquired it doing about 1.22 million in ARR. Have you been able to upsell it like you thought you would? In other words, has that channel doubled or tripled year over year, or no, it's been slower?
It was a little slower in terms of the growth rate we expected, but it actually had a positive impact on our growth rate in our two other products. Optimize, which is a SaaS-based product that businesses buy the marketing platform, if you will, just to do their own internal marketing. So think about businesses doing their own cross-sell, upsell messages, not wanting to expose themselves to sort of broader marketplaces. And that's definitely been a much more positive impact than what we expected.
Okay.
So, and also it's helped drive monetize acquisitions as well. So businesses that want to use a combination of products, it's helped us get into those businesses as well.
Tell me more about the Rokt story. So it sounds like you've raised capital. What have you raised?
We've raised 34 million. So we raised a Series A of just over 8 million US and a Series B of 26 million. The Series B we raised, we extended it slightly, and then we used 5 of the Series B money to do the CalReply acquisition as well.
Yep. Which makes sense. Were those two things kind of tied together when you were pitching, investors on the second round? The acquisition was in that talking points.
It was, yeah. That was tied into the business. It was a small part of it. It was 5 out of 26, but the primary thing for us was just feeding more growth. we're a little unusual in the way we run the business. We tend to run it quite conservatively on cash. So we're a cash flow and P&L positive business. And so we tend to invest the dollars we make back into long-term product development, but we're not sort of hungry for, capital from a cash burn perspective. We tend to be much more conservative on the cash flow, but we used it to drive longer-term investment in product, the acquisition, and also to open up a couple of markets that we weren't in, like Japan, Germany, France, that we wanted to get in. And so they tend to have 12 to 24 months investment timeframes.
And what's your team size today?
We're at 150 today.
150 across how many offices, or where's your headquarters?
So we're across 8 or 9 offices now. The big ones are New York, where we've got all of the commercial stuff centered. So CMO, CRO, myself are all in New York. We've got about 60 people in New York. We've got then all of our engineering and our head of product and engineering based in Sydney, Australia. So we've got about 80 or 90 people there. And then we've got small offices in other parts of the world. So Auckland, Singapore, Munich, Tokyo, London, in different, just basically doing client service in those markets and some regional headquarters.
What are you guys at today now in terms of total customers you're serving?
We serve about 2,000 customers.
And that's across all your products, correct?
Across all our products, mainly at the enterprise level. We've just rolled out a small business product, and that's new for us. But it's all it's very much focused big enterprise level. Your Expedias of the world, your Ubers of the world, Apple, those sorts of brands, Ticketmaster, Live Nation, Groupon, big e-commerce brands tend to be our mainstay clients.
And you said you're growing fairly rapidly. Can you give us a sense of revenue today? How big are you guys?
Yeah, we're doing a run rate of about $6 million a month at the moment, and we're on track to do about $100 million next year.
Now, and you said you're growing 100% year over year, so December 2016, you were doing about $3 million a month then?
Slightly less than that, yeah. So the growth rate's been a bit faster than that. But so it's come from, in the start of 2013, we were tiny, just in Australia doing, 100,000 a month, or there about 200,000 a month. So very, very small. And that's grown very quickly over the last few years.
Now, you say that the way you say that revenue number, you said about a $6 million kind of monthly recurring revenue, and you use the term run rate. So when you use that, it's a signal to me that you feel like even on the kind of ad spend percentage side of the business, it's pretty stable and pretty growing, and it's revenue you can count on, right?
Yeah, we're not like ad tech businesses or where you're doing IO to IO or DSPs or those sorts of businesses that are plugged into agencies or other worlds. We run a direct-to-brand model. It's mainly marketing tech. It's integrated directly into CRMs. We mainly work on the marketing tech side. It's typically not IO driven, but driven by performance. Really is typically the primary driver of it.
That's huge, though. Most people just look over that. And guys, when Bruce says IO, he means insertion order, which means you have to have a sales team trying to close deals every month to keep revenue predictable. Bruce, what you're saying is your thing is tied to some value utility metric, which is very predictable over time.
Yes, yeah. And our clients who spend most of our money have been spending money with us for 5 years continuously, and they just spend more money each year based on performance. So our sales team, to give you a feel of the 150 people, I think we've got about 7 or 8 in business development, actually in sales. So it's a relatively small. Half our team is focused on product and engineering and building out the next wave of product. And a lot of it is sort of helping clients actually get smarter about marketing tech. So it's almost like leveraging their own media assets data, how to send triggers at the right time, what sort of signal should they be using. We spend a lot of time helping businesses just get smarter and really supporting, I think, what is happening, which is an evolution from, the ad tech world and the traditional media agency world to much more marketing tech and own media assets, and businesses trying to control their destiny with their customers much more directly. And that's what we're trying to support our clients to do.
Last question here, Bruce, before we wrap up with the famous 5. What do you assume lifetime value is? I know that's always a tricky number, but what do you assume it is for your clients?
It's very hard. I mean, we have clients that will spend, $20 million with us this year, and we've got clients that will spend $100,000 with us this year, and everything in between. So You've got big enterprise clients that look to solve significant problems and can be basically whatever. There's businesses out there that are spending, $250 million a year on Google AdWords. And so it's really about tapping into those sorts of markets and helping them solve that problem with innovative tools and creating, this virtual network where they can actually partner with other businesses and leverage their own assets so that they're actually creating revenue streams to fund their customer acquisition on stuff that they were never doing before.
Mm-hmm. What do you like when you look at all the salaries of business people, salespeople, all that divided into the new customers you're adding each month? What do you like to get in terms of your payback period fully weighted? Under how many months?
So typically the way we think about it is cost of sale for new business, and year one cost of sale typically sits around about 20%
of the contract value?
Of what their spend is. So delivered revenue year one versus cost of acquisition and new business is around 20%. And obviously that falls away to almost nothing in years 2, 3, 4 as they continue to go onwards. Our churn rates are almost nothing. So that's a really different part of our business.
Less than 1% monthly?
Less than 1% monthly on most of our products. On the acquisition product, there's where people come in and out a little bit, seasonality. You get some. If you look at it monthly, you get some weird results because they may only spend in 2 or 3 months of the year. But typically, our churn rates are, if you look at it over a longer period, even on that product, are very low. But on the monetized product, on the optimized product, on our CalReply product, our churn rates would be less than 1% a month.
That's amazing. Yeah. So if I take $6 million a month right now, divided and your 2,000 customers divided into that, this is obviously hard to look at it this way, but an average is about $3,000 per month per customer. And if you get it back, that's obviously a $36,000 ACV. And if you spend 20% of that on CAC, you're spending, 6-ish K on CAC, recovering it in just 3 months. That's a healthy money velocity channel there.
Yes.
Awesome. All right, Bruce, let's wrap up here with the famous 5 one-word answers. Number 1, what's your favorite business book?
Favorite business book are books around diverse, people that effectively had to overcome adversity.
Name one.
So like A Long Walk to Freedom, A Fortunate Life. They're not really business books. They're the ones that I think, in terms of an entrepreneur, you need to have that stamina, endurance, and ability to come adversity. And so they're probably the ones that I'd say are top of my list in terms of mottos and things that I tend to carry with me day to day.
Number 2, name a CEO that you're following or studying that's not mainstream.
Yeah, I don't tend to follow a lot of other CEOs. That sounds a bit trite. I like people that are actually taking risk and want to change the world. So the standard people that tend to pop up in my newsfeed are the ones that are actually doing something that's risky. But
Bruce, let me ask you differently. Who do you like to get dinner with in New York and brainstorm just about life and business with?
My wife.
Good answer.
Successful entrepreneur in her own right.
Good answer. I'll stick her down. All right. Number 3, besides your own, what's your favorite online tool?
Expensify. I love it. It's I hate expenses. I hate anything that actually is not delivering value to clients or delivering value to sort of the end users. And expenses are one of the worst things in the world, I think, to spend time on. And it's just been one of those massive time-consuming tasks in a lot of big businesses.
Yep.
But if you haven't used Expensify, try and use it. It's a great tool.
David was just on the show about 2 weeks ago. They've just passed almost $60 million in annual recurring revenue, so they're killing it. Number 4, Bruce, how many hours of sleep do you get every night?
Look, I would love to say I get 8 hours. And when I'm training, I ran my first marathon last year, and I actually did get up to 8 or 9 hours. But typically, it's normally 6 hours. And then I'm a bit like a sleep camel, and I save it up and store it up, and then I catch up in holidays.
Yep.
But a friend of mine at J&J gave me a recommendation for a product called Whoop, which is a good tool if people want to track their sleep patterns. And it really helps you actually work out what actually disrupts your sleep. And that actually helped me get up to sort of 7 or 8 hours.
That's good.
When I was using that.
And what's your situation? You said married. Do you have any kids?
I have 5 kids.
5 kids. Holy mackerel. And how old are you?
I'm 45.
All right, Bruce. Last question. What do you wish your 20-year-old self knew?
I wish that I would basically say stay impatient, continue to follow your dreams. And never get trapped in something you feel you're obligated to do in terms of work. That's the worst thing in the world. If you feel like you've got to do something because you need that monthly paycheck, then you're going to find yourself, never actually able to follow the aspirations that you've got. You'll never actually fulfill your full potential.
There you guys have it from Bruce. He goes from jets to marketing software to $15 million acquisitions, launched the Rokt many years ago. Now has a team of about 150 people. They've raised approximately $34 million, 2,000 customers, doing about $6 million per month in terms of run rate. That's up from just $3 million per month about 13 months ago. Hoping to break that $100 million run rate here in 2019. That would be next year. Healthy economics across all their product lines, generally less than 1% churn. They're spending about 20% of year one contract value on acquisition. So math checks out there. Bruce, thank you so much for taking us to the top.
Thanks a lot, Nathan. Cheers.